Hello, welcome back to Galvix YouTube channel. If your business sells products to customers in California, there's a good chance that you might be legally required to collect and send in sales tax, even if your company isn't physically located in the Golden State. Why, you may ask? It all comes down to the concept of sales tax nexus. So, in this guide, we'll break down exactly what that means for your business in California for 2025. So, the first thing is you can have two types of nexuses. One is your physical nexus, which is straightforward. If you have any sort of physical presence in California, like an office, a warehouse, a retail store, or even an inventory, or even a remote employee, or any temporary sales activities that you're doing in California, then you are likely going to trigger this. In case you do not have a physical location and you have something called the economic nexus, which would mean that your nexus is purely based on your sales activity into the state. And if you cross the threshold of $500,000, then you are required to start collecting sales tax. And there is no any specific rule for transaction threshold. So all you need is $500,000 or more amount of sales, and then you are going to be required to start collecting sales tax. Now, how do you know what all is included in this calculation, which is what counts towards that threshold? Now, the first thing is marketplaces like Amazon, Etsy, yes, they do count if your sales are through any of these facilitators. Even if the marketplace collects taxes on your behalf, those sales still count towards your Nexus threshold. Of course, any direct sales from your own website also count. Other than that, what about wholesale or retail transactions? Well, some states exclude these, but in California, resale and wholesale transactions are also included in the economic threshold calculation. So make sure that you track these sales even if they are exempt for taxes, as they do contribute to your Nexus status. And lastly, are non taxable or exempt sales excluded? Again, in California, the answer is no. Non taxable sales are also included in the calculation for Nexus threshold. This means that even transactions where no tax is collected can trigger a registration requirement if your total sales crosses that 500,000 limit. The rule here is if it's a sale to a California customer, it counts. So if you have any of these, then you are required to start collecting sales tax, which means you need to register for sales tax. You will need to start registering yourself onto the CDTFA portal for your sales tax registration. So that's that. Let me know if you have any questions. I'll be here, happy to help you. We at Galvix make this easier for you. So if you need any sort of help in terms of registration or Nexus calculation or literally any sales tax related question help, we are here. Check us out in the comments below. We have a Nexus tracker which will help you understand when you're reaching any thresholds. This is a complex thing that has been made very simple, where all you need to do is just check this map and connect one of your sales channels to this app, and you will know exactly what is exposed and what's approaching. So if you want our help, let us know. Take care of yourself. I'll see you again. Bye bye.